Thank you guys for joining us. This is our monthly webinars, and today we're going to be doing asset management and how to manage assets like a pro. This is the table of contents that we're going to be going over. So the first one is going to be introduction to the team. Second one is going to be understanding asset management in multifamily properties. Third point is preparing for successful asset management. Top 5 keys, strategies for effective asset management, financial analysis and reporting, communication, investor relations, top 5 myths about asset management, QAA, and then we'll finally do a conclusion. So go ahead, John, take it away.
Absolutely. Let me know if I'm echoing in the back.
You are echoing a little bit on the back.
Bear with me here as I just try on this new speaker here. How am I good now?
Yep, you're good.
Awesome, cool. So we're just going to do here for anybody watching that's new, we're going to be introducing our team and who we are. RealEstateWebinar is a team of experienced real estate professionals who specialize in acquiring and managing multifamily properties in the U.S. We understand the challenges of investing in real estate, especially when you are short on time. That's why we offer a passive investment opportunity that allows you to invest in a diversified portfolio of multifamily properties without having to worry about day-to-day management. What is our team and our track record, you may ask? Our team has over 50 years of collective real estate experience and has a track record of success across various industries ranging from hospitality, technology, government, and small businesses. Collectively, there's about 17 deals completed to date, 7 full cycle deals completed to date, 1,600 units under management, 146 million asset under management, and 250 million in total transactions. Some of the states that these properties are owned are in North Carolina, South Carolina, Florida, Texas, Indiana, and Arizona.
Thank you. Thank you for that, John. All right, so we'll go right into the next point. So the first thing we're going to be talking was understanding asset management in multifamily properties. So what is asset management and its role in real estate investments? So asset management, strategic approach to maximize value and performance of a real estate asset. It's what asset management, and there's usually an asset management team that will pretty much manage the asset once you have closed on it. Now, what is the role in real estate investments? To optimize financial, operational, and physical aspects of the property. Now, asset management is very crucial for multifamily properties because you usually have a business plan behind each investment. So if you have a strong asset management, strong operators, you're able to perform on your business plan, which is pretty huge. I know a lot of people may talk about closing on properties, but from there to stabilize and repositioning a property, that's the whole other aspect of this. Now, what are some challenges and opportunities of managing multifamily properties? Well, the challenges that we faced is higher tenant turnover compared to single family properties, managing multiple units in diverse tenant needs, balancing maintenance and capital expenditure requirements. Now, where is the opportunities? The higher potential rental income due to multiple units. So basically, if we can increase the rents across hundreds of units, we're able to increase the value by millions, hundreds of thousands of dollars to millions of dollars. So that is why we love it, the way it's valued as comparison to the single family. Now, economies of scale in property management and operations. What our long-term goal here at RealEstateWebinar is actually going to be to have our own in-house management, property management company and management team. And that way, when we have that in place, we're going to be able to go through units very rapidly. Like our average that we're looking to do in the near future is between 5 to 6 units per month. So that requires your team. It requires a property management. It requires systems, procedures in place. So that is kind of some of the long-term goals that we have here at RealEstateWebinar. It allows you to scale your portfolio and really executing a business plan. Now, diversification and benefits for investors. Now that is another benefit. When we usually are managing these assets, we already have an on-site management, because after you go 70 plus units, you can actually hire your own, you already have your own maintenance team. You have, contractors. I mean, you have a much bigger team that is helping you manage the property. It's not you by yourself managing or have one property manager. Now, these are the 4 key responsibilities of an asset management manager. So financial analysis, evaluate property performance and financial viability, monitor income, expenses, and cash flow, conduct financial forecasting and budgeting. Now, obviously, because of the way the properties are valued in the multifamily space, somebody in your team that is, it's financial savvy is really going to come in handy, both underwriting deals to, like we mentioned here, performance, financial stability, monitor the income, expenses, and cash flow. Now, some of the things that we do on our assets is when we have insurances, like, we're doing insurance, when we're doing any sort of services, we try to actually shop the market and see if there's any way in which we can do better on the expense side of things. Sometimes as well as by putting a different AC, a different heating, a different cooling, you're actually able to lower expenses. So it's not only about increasing income, but also lowering expenses. Second, property operations, oversee day-to-day management and maintenance, optimize occupancy rates and rental income, coordinate tenant services and satisfaction. So those are some of the other aspects of asset management that we do. Obviously, like I said, we have a team, usually an asset management team, and we collectively go through some of these steps here. Number 3, strategic planning, develop investment strategies aligned with your goals, identify opportunities for property value enhancement, and conduct market analysis and due diligence. So, obviously with multifamily, with business, it's about strategic systems in place. So, yeah, that's that. Conduct market analysis. We're always looking at the market. Markets are constantly changing across the board. So, sometimes even right now in some markets, the rentals are actually not going up as predicted. So something to be aware of, always studying the market, always studying what's going on, always studying your competition to be able to see what you're able to charge for rent, which is really important. And then the fourth part is risk management. Identify and mitigate risks related to the property. Usually we're looking at capital expenditures, what needs to be fixed in the next couple of years. Ensure compliance with regulations and legal requirements. You always got to make sure you're up to date with the city, with fire department, all right? It's always really important. Maintain adequate insurance coverage. Me coming from an insurance background, that is huge, as most people will try to save on the insurance, but they won't be properly covered in case there is a claim that occurs. Go ahead, John.
Thanks, Jeff. Preparing for a successful asset management. Conducting thorough due diligence is extremely important. Due diligence to instill trust and confidence in investment decisions, analyze market trends to identify high potential areas for investments, and demonstrate market expertise. We also want to develop a clear investment strategy aligned with investor goals, showcasing our commitment to their success. So ensuring that we're optimizing the building, for example. Build a reliable team of professionals, including experienced property managers, contractors, and trusted partners to ensure investors of competent asset management. So it's extremely important. Of course, it's a big win once you acquire the asset, but what is after? Asset management, to ensure that you're optimizing on the investment, optimizing on the business plan, making sure that the business plan is growing accordingly. And again, the team, like the property managers, the contractors, and other partners involved, is extremely crucial to help you reach that goal in a timely manner and help you move on to the next.
Yeah, actually, and one benefit of once you go through the process of acquiring an asset, repositioning the asset, one benefit is that you actually already have a team in place. And then you're able to acquire assets near that asset, and you already have everything in place. You already have the contracts. You already know what the rents could be. So that is another reason why, like, we're planning to be asset management on some of these assets in the North Carolina market in the near future, just to be able to get a better grip on the market, even a much better one. Go ahead, John.
Thanks, Jeff. Assessing market trends and identifying high potential areas. So one really important thing is understanding local market dynamics and trends, build investor trust, and position us as a knowledgeable expert. Analyzing supply and demand factors demonstrates our ability to identify market opportunities. Identifying emerging or undervalued markets showcases our expertise to finding lucrative investment opportunities. And this goes back to market analysis, understanding the market that you're going into, what's happening, where the job growth is, where the businesses are moving to and emerging new developments such as businesses, retails, and such.
Yeah, and I mean something that I just kind of wanted to add, because I know I had folks all the time ask me about, why we're not investing in Cleveland. We just actually entered the Midwest market. However, Cleveland, when analyzing the market itself, it doesn't meet our metrics. And our previous webinar was about how to identify market and different things that you can look for in a market. And when we were looking at the population dynamics, the population wasn't going up year over year. It's actually declining. And that is a major factor. Even if the population is over 1 million, when you look at it over a long-term period of time, we don't want the population to be declining. We actually want it to be growing for the most part. So that was something that, we don't really like in markets. And that's where we prefer Columbus and Dayton, Ohio, even Cincinnati. They're markets that are growing, populations are growing. So you're able to capitalize on the rental demand in those markets. Go ahead, John.
Thanks, Jeff. Developing a clear investment strategy. Developing a clear investment strategy establishes our credibility as professionals, commitment to investors. Defining investment objectives and risk tolerance demonstrates our focus on alignment investments with our individual investor goals. Determining investment horizon and exit strategy showcase our thoughtful approach to maximizing return. Creating a roadmap for achieving investment goals illustrates our commitment to delivering results and providing a clear path to success. So our main goal and path to success has been the value add syndication game. So our strategy isn't buying high-end apartment buildings with lower cap rates. It's going in, doing the value add, optimizing the building, and getting a bigger, higher return, but still playing within that silver line of mitigating risks between too high and too low.
Yeah, and something that I just kind of wanted to add to that is that, we're not looking for usually we're not looking for an investor that's going to invest with us. And actually, we actually had a conversation with an investor earlier about that today, that we're not looking for investors that are just going to come and invest once and then, make some money and then just go on. We actually are looking for long-term relationships and where we can multiply that money over and over again. Let's just say we took 100,000 and then in 2-3 years you turn that into, let's just say 250,000, but then you invest it again and then that turns into 400,000 and so on, right? So essentially that's kind of what we want to do. We want to create a long-term relationship, a long-term partnership, and that's why identifying what your goals are and making sure that they align with the team's goals and what everybody's trying to accomplish just makes it easier for everybody, and it makes it just a very enjoyable path.
Thanks, Jeff. Building a reliable team of professionals. Hiring a competent property manager with experience in multifamily properties ensures our investors receive top-notch management and care. And who ensures that? We do. We ensure that the property management team is capable of handling the asset, capable of handling the asset class that we're going into, that their experiences and values align with us to ensure we're working together to the best high quality of work to ensure our investors are happy and the business plan is moving accordingly. Engaging skilled contractors for maintenance and repairs demonstrates our commitment to maintaining and enhancing property value. Collaborating with real estate agents and brokers provides investors with valuable market insights and deal sourcing opportunities and maximizing their investment potential. Again, going back to the importance of building relationships and having a team that can help you achieve what you're looking to do, whether that is property management, contractors, brokers, and whatnot. You want to make sure that you're aligning your goals and your values with the right people to ensure that you have the most successful path possible.
Yeah, and something that I think John just touched on that I wanted to just kind of add to that is that in the multifamily space, especially on the larger multifamily space, it's actually really important that the property managers are actually familiar with your class of property. For instance, if you're looking at a C class that you're going to turn into a B class, well, you're not going to go and get an A class type of property manager because they're not going to know how to add value to the property. Like, the reverse could be also true. You don't want buy an A-class type of property and have a C-class type of property manager, because they're not going to be able to execute, they're not going to be able to manage it, they're not going to be able to understand that property. So it's really important that the property managers are in that line with your class of property. So again, there's A class, B class, C class, D class, and it's just a different class of neighborhoods, different type of tenants. We typically stay in between B and C class, preferably a C class building in a B class area. That's usually ideal, or turn a C class into a B class. That's where the huge value add is. Okay, so thanks for that, John. So now we're going to go over the top 5 key metrics for effective asset management. So number 5, we have implement effective tenant screening and retention strategies. Our rigorous tenant screening process ensure that we place qualified and reliable tenants, reducing the risk of problematic tenancies for our investors. Second point we have here is we maintain positive tenant relationship through effective communication, responsive maintenance, and addressing concerns promptly, which enhances tenant satisfaction and improves tenant retention. Now, we also do a thorough proactive lease management and implementation of lease renewals incentives. We focus on maintaining a stable tenant base, minimizing vacancies, and maximizing rental income for our investors. So this is a really key component when repositioning assets. You don't want to just get any tenant. Obviously, you want to go, your property managers will ensure of that, right? But you want to make sure that everything aligns with what your business plan, right? Usually, in most of the assets that we're acquiring, we're getting rid of the tenants and we're renovating the unit, and then we're looking for a newer, better tenant. But again, kind of as per John's point, it goes back to doing the right market research to make sure that there is demand for that rental unit. And not only that, but you're going to be able to rent it for what you're projecting. So really key. Anything you want to add to that, John?
No, I mean, the most important thing is having a checklist to ensure that you're getting the top of the top tenants you can get in your building, because those are going to be the tenants that are going to be hitting those market rents and staying with you on the long run. If you're starting out on unit 1, you want to ensure that you're getting someone that's going to be staying with you once you start turning over unit 90 at market rent. And again, those maybe once you turn over unit 1, let's say top market rent, for a 2-bedroom apartment is $2,100. And once you start turning over unit 150, now it's 2,100 or 2,200. So you're still not so far off, but you still have that tenant that moved into unit 1, but the previous tenant was paying per se $1,300-$1,400, and they're still there. They're still a good tenant. They're paying on time. They're not causing any damages or any sort of liabilities or causing a mess or headaches to the property managers. So that's kind of the things that you're looking for the property managers to do, and to ensure that they have a track record of understanding what your business plan is.
Yep. Yeah, good point. And these are just some of the things that we look for in tenants. What is the income, any employment, landlord reference? That's always really key, right? You can get their previous landlord and you can ask them about this tenant. Credit history, super key. Evictions, if they've been evicted before in the past, and then criminal history. And this information is all more aligned in the US. I'm not sure how much of that will you be able to get here, like evictions, criminal history. I don't know if that applies in Canada. I know that I can speak from experience that when we had a tenant in one of our property, and I was just kind of I was actually doing the property management, and I just wanted to get a tenant in because I was charging too much for what the market rent was, and I didn't do the proper due diligence on both income, reference. I did do the reference of the previous landlord, but I think they might have lied to me because they can give you anybody's number. Credit history, evictions. I didn't go through all that, and we definitely struggled with that tenant. We had a bad tenant close to a year before we were able to get her out, and that was kind of part of the reason why we wanted to go into the US, because we just didn't want to deal with those rules that they have in Canada. And if you're tired of that, hit us up. This is what we do. Number 4, utilize technology and data analytics for efficient operations. Now, we leverage cutting-edge technology and property management software to streamline operations, enhance communication, and provide transparent reporting to our investors. We actually use WhatsApp quite often to communicate with our team, communicate with different projects that we got going on. That's just kind of one of the things that we use. We have many different systems, CRMs that we use as well, just to have that communication and be able to have a transparent relationship with our investors and with our team in operating. By harnessing the power of data and analytics, we gain valuable insights into the property performance, market trends, and tenant behavior, allowing us to make data-driven decisions to maximize returns for our investors. So again, back to the data. I know we talked about data quite a bit in today's webinar, but just to show the importance of the data and what that could do to your business. I know we listened to some syndicators out in the US. What are they called, John? Gray Report, and they have full-on people studying the data, studying analytics, and it just gives a very thorough report on the market, which is, I think, something we may do in the future. Now, through all the utilization of the smart building systems, we optimize energy usage and enhance operation efficiencies, reducing costs and enhancing the overall value of the property. So we try to see what technologies we can add, what things we can make so that we can reduce the cost. And another idea, like I mentioned, is reshopping all your insurances, all your maintenance, all your all your expenses to the best of ability. Number 3 is control expense and reduce operation costs. I think we just touched on this, but just kind of to add some more points. Our diligent approach to controlling expenses, reducing operational costs, helps to maximize the profitability of the investment for our investors. We regularly review operating expenses to seek opportunities for cost savings without compromising the quality of property management and tenant experience. And kind of as per to that point, that's kind of part of the reason why we want to have an in-house property management in the near future. That way we can have everything in-house, because what the battles with the property management is that you're obviously trying to get it for as low as it can in terms of property management fees, and they're obviously trying to get it for as much as can. And when you pay less for property management, you will pay for it in another another space or another way. So not always so good to have a low property management fee. So by implementing energy efficiency initiatives and negotiating competitive vendor contracts and practicing effective budgeting, we ensure efficient operations and optimize financial performance. That's just kind of to add to the point that I had mentioned earlier. Number 2, maximize rental income and optimize occupancy rates. Our expertise in conducting market research allow us to set competitive rental rates that maximize income while maintaining high occupancy rates, ensuring optimal returns for our investors. We leverage effective marketing and advertising strategies to attract quality tenants, minimizing vacancies and maximizing rental income potential. Now, throughout the implementation of tenant retention programs, we focus on building long-term relationship with tenants, reducing turnovers, and maintaining high occupancy rates, which directly benefits for our investors. Excuse me. Now, one of the things that we liked about larger multifamily properties is some of the common sectors, right? So you have your common pool, you have your gym, you have your dog park, you have your barbecue area. So there's so many different common areas. And if sometimes what we find is just as simple as sending, making popcorn for them, right? Like for the tenants, that sending a gift card for Christmas, right? Little things like that will make a huge impact when you have good tenants and just being able to maintain them in that building, right? Just taking care of the tenants, because at the end of the day, they are part of your business. Number 1, implement proactive property management practices. Now, what we do is we proactively manage properties to ensure that potential issues are identified and addressed promptly, providing peace of mind to our investors. Our regular property inspections, preventative maintenance, and prompt repairs help maintain the value of the property and minimize unexpected costs. So we're always doing a checkup on the properties, big ticket items. What is the roof looking like on all our properties? So we do quarterly inspections on the overall high ticket items, and we always try to budget for that. Obviously, before we close on the property, we have reserves aside and we have capital expenditures expense aside. But things do rise up, so it's always good to have extra reserves in case anything breaks. By establishing effective communication channels with tenants, we address their needs and concerns promptly, creating a positive tenant experience that contributes to tenant satisfaction and retention. I find that the tenant property management relationship there's always so much tension in between. So what we try to do is we try to create a relationship, and we really try to help and hear what their concerns may be. Go ahead, John.
Thanks, Jeff. One thing I wanted to touch on was you as a syndicator, as an operator, ensuring that the property's being implemented as it should be to the highest quality standard possible. If you know, there's so many things about different markets and different areas of expertise, such as property management, that not every property management will be perfect. Some of them will be better than others. But the point that I'm trying to get at is Jeff had mentioned a couple months ago property management companies that have incentives for tenants, right? So if a property management company doesn't have something like that in place, where you can spend an easy, $50 every couple months just sort of incentivizing a tenant, that's something you can bring to the table. So just those little things is what's going to help you optimize and just get
And make
better.
you stand out. I would say make you
for
stand
sure.
out, right? Like I know what John's talking about, and it's property management that if you're paying on time, if you're not causing any trouble with taking care of your unit, they will actually start they do like a rewards point. And for every time that you again, you pay your rent on time, you maintain the property, you do a good job, they keep giving you points, and then eventually what they're able to do with those points is they're able to shop with those points, they're able to buy things with those points. So it's a really interesting way to incentivize the good tenants. As much as there's bad tenants, there's also good tenants, right? So we got to keep that in mind.
Absolutely. Thanks, Jeff. We're going to look over financial analysis and reporting. Next slide, please. Thanks, Jeff. Financial analysis and reporting. We conduct regular financial analysis in asset managers. As asset managers, we perform regular financial analysis to ensure effective management of our investors' assets by monitoring key financial metrics such as cash flow, net operating income, and return on investment. We identify opportunities for improvement and mitigating risk. Our analysis allows us to make informed decisions and maximize returns and provide our investors with a peace of mind. Another point is we develop comprehensive financial reports as asset managers. As asset managers, we create comprehensive financial reports that provide transparency and insights into the property's performance for our investors. Our reports include essential financial indicators such as rental income, expenses, occupancy rates, and capital expenditures. By presenting data in a clear and easily understanding format, we empower our investors to make informed decisions, showcasing the value that we bring to their investments. We evaluate key performance indicators, as asset management is extremely important. As asset managers, we establish relevant KPIs to ensure success and progress of our investors' assets. Through ongoing monitoring and analysis of KPIs like cash on cash return, debt coverage ratio, and property value appreciation, we ensure our investment is on track. Our focus on the KPIs enables us to proactively identify areas for improvement and deliver the value of our investors' expectations. So we do monthly reports on the property, such as, everything you can think from the property is how it's performing, new things that have been installed or repair, tenant turnover, net operating income, and just a progress report on what's happening.
Yes. Yeah. No, I don't think that I have anything to add to that. Just, I know it's a lot of information, but what we really want to just inform folks is that you as a passive investor, you don't have to deal with any of this, but you do get the monthly reports. You get to see what's kind of happening on the outside while we're working on the inside to, stabilize the asset, increase the income, lower expenses. So as a passive investor, that's the beauty of it. You get to enjoy just the benefits of it. Go ahead, John.
Thanks, Jeff. Risk management and mitigation. We identify asset potential risks as managers. As asset managers, we conduct thorough risk assessments to identify and mitigate potential risks associated with our investors' assets by proactively identifying risks such as market fluctuations, tenant turnover, regulatory changes, property damage, and we develop a strategy to minimize that impact. Our commitment to risk management ensures that our investors' assets are protected and their investments are secure. We develop risk management strategies and asset managers. As asset managers, we develop customized risk management strategies tailored to the specific risks identified for each investment. Through the implementation of risk mitigation measures such as insurance coverage, contingency plans, and legal compliance, we minimize the potential disruptions and financial impact. Our proactive approach to risk management brings value to our investors by safeguarding their investments and providing them with peace of mind.
Yeah, and just kind of to add to that, one of the reasons why we decided to go after larger multifamilies in the U.S. was when we looked at the risk management, and mitigating risk when it came to multifamily properties. We found that in Ontario is a very risky business, multifamily, because of the landlord rules that we have. Whereas in the US, it's a completely different game, right? So again, back to that original point, we get to actually execute on a business plan in the US because the way it works in the US and the landlord-friendly states that we've identified, we're actually able to execute our business plan, meaning we're able to turn over units, we're able to increase rent, we're able to lower expenses, and we're able to do it to a point where you're actually able to calculate and you're able to just systemize that and have it where it's just turnover, right? And then you stabilize that asset, and then now you just manage it, right? So that I find is a challenge in Ontario or in Canada, where you're not actually able to, you're putting, I would say you're putting your investors money at risk because a lot of the times our play is value add, and if you can't cash flow, we got to get to cash flow somehow, some way. So if you're not cash flowing, you're bleeding cash flow, then it's not really a business we want to be in. With the larger multifamilies, you're cash flowing from day one, and you're increasing your cash on cash year over year, right? Because you have so many units, right? So that you have so many tenants paying your expenses and paying the property managers and stuff like that. So just wanted to add that to John's point. Now we're just getting to the end of our webinar today. We're going to be going over our top 5 myths about multifamily asset management. Number one we have is asset management is only for experienced investors. The fact is, our passive investment opportunity allows investors of all experience levels to benefit from professional asset management. Our team of experienced real estate professionals specialize in acquiring and managing multifamily properties in the US. Now, we do have a lot of Canadians that invest with us, and that is just because they're able to, again, tap into those opportunities that were not available previously, and be able to invest into a large asset, multi-million dollar assets, and be able to benefit from the asset management team. As a passive investor, you can rely on our expertise and track record to navigate the complexities of multifamily asset management. So again, as a passive investor, you don't have to deal with the day-to-day activities. You can invest and you can let your money grow, while we, the asset management, deal with the day-to-day in Myth number 2, asset management requires a significant time commitment. The fact is, our passive investment model relieves you from the day-to-day management responsibilities. We understand the challenges of investing in real estate, specifically for those with limited time. With our passive investment opportunity, you can enjoy the benefits of real estate investing without the hassle of managing property yourself. And it's interesting. I actually talked to somebody who had called us about possibly investing, and they were telling me their experience that they had. They wanted to get into investing, right? And they bought a property. They originally had a single family house. They originally thought it was going to cost them about $100,000 to fix it up and potentially sell it. They bought it, put over $300,000 of renovations into it, and now he's trying to sell it. The market has completely shifted upside down. Now he's trying to sell it for below, so you'd actually be losing money on top of selling it over $100,000. So he doesn't want to deal with this anymore. He doesn't want to invest. He wants to do it passively because he sees what could go wrong if you try to do it on your own, and that's something that we definitely couldn't imagine going through, but that's just the benefit of investing passively with a team that has a track record. Number 3, asset management, it only benefits active investors. And I have a little diagram here showing active investing versus passive investing, which best fits for you. The fact is, our asset management strategies bring value and benefits to passive investors as well. We have a proven track record of successful acquisitions and management of multifamily properties. Our expertise in asset management ensures that your investment is being actively managed to maximize returns and mitigate risk. Again, back to the team. We work with a very experienced team of operators, and we're able to deliver results, and we're able to deliver really good opportunities for our investors, which we are just very glad and very happy about, and makes us confident when going out and talk to investors, because it's not just me and John going out and buying buildings. We have a team with a track record that we are doing these deals with. So it just brings a lot of confidence and a lot of experience to the table. Number 4 is asset management is prone to high risk. Now, the fact is our team employs risk management strategies to protect your investment. We conduct a thorough due diligence before acquiring properties to identify and mitigate potential risk. And this includes environmental reports, inspection reports, property managers that will walk through the property to make sure, we can capitalize on the rental increase, see what the efficiencies are with the building, and much more. Our proactive approach to risk management ensures the long-term stability and profitability of your investment. Again, by buying or investing into the large multifamily, you are actually mitigating a big part of the risk, which is vacancy, right? If you have a duplex and you have one tenant not paying you, 50% vacant, which is just crazy. And we've been there. So myth number 5, asset management is only about maximizing rental income. The fact is, our asset management strategies encompass a holistic approach to maximize returns. While maximizing rental income is important, we also focus on expense control, occupancy optimization, asset appreciation, and risk mitigation. Our goal is to deliver consistent and attractive returns with safeguarding your investments. And just to kind of give you guys some examples, right? In the US, I don't know if it's familiar in Canada, but I know in the US, they have a thing called the RUB program, R-U-B. And basically what that means is that you're able to go through, if the tenant is paying the utilities, you're actually able to go through the RUB program and you're actually able to charge the tenants the utilities, which is just incredible way to minimize your expenses and increase your income, right? Because your income is your NOI is going to increase. So that is something that is available in the US. I really don't believe is available in Canada, but I'm sure if Canadians had that option, it would be tremendous, right? In Canada, you buy a building, if you're paying the water, hydro, electricity, everything, heat, you're going to continue to pay it until you get the tenant out and so on, right? So just wanted to share that. So we'll open up for Q&A. If anybody has any questions about our webinar today, definitely unmute yourself and you can ask any questions. Anything in particular, John, that you want to talk about at all?
No, I think you've touched on all great points.
Maybe we can
due diligence.
Maybe we can just share how important, how crucial asset management is going to be in today's environment, right? And high interest rates. A lot of operators are getting burned because they were not prepared. They overpaid for property. They didn't do the proper due diligence. They had, a floating rate for their lending, and now they're in trouble. And I think that goes to show you how important the asset management is and how important it is to know your market, right? Nashville being one of the markets that we were looking at, the rents are not going up right now. They're actually stagnant and they're actually going down a little bit. What is our projection? I mean, I project that obviously with interest rates going up, it's going to be harder and harder for people to acquire single family properties, and they are going to turn into renting. That is kind of a projection that I see. Now, how much will they be able to afford? That depends on the market, but that is something that I can see, at least, that if they can't buy a property, they're going to turn to rent. And the strongest operators, the ones that have the best properties with the best amenities and are in a good location, are the ones that are going to be able to capitalize on that opportunity. Any thoughts, John, on that?
No, I think that's a guy I didn't even think. I mean, that's a great point of discussion, and I wouldn't have thought of bringing that up. So absolutely, especially in today's market conditions, that is extremely crucial.
Yeah, I mean, some operators thought they were going to be able to just the rents were going to continue to go up year over year, 10%, whatever has been going up. But they're seeing that that's not the case, because obviously when you look at some of the metrics that we look at when we look at a market, is what is the income in the market? What is the medium income in the market, right? What are people making, right? If people are making, let's say, $50,000, right? How much are they spending on rent, right? And if you're budgeting $2,000-$3,000 and they're making $5,000 a month, I mean, is that realistic, right? That's more than half of your income in rent. So just something to think about. But no further questions. Again, guys, just wanted to share here how we help Canadians, I mean, we also have Americans that we work with, but how we help Canadians invest passively in the US. So just want to share a little graph about how we're able to accomplish that. We have a strong team behind us that helped us put this all together. They're professional in the cross-border space. So I just wanted to share this. If you guys have any questions about it, just book a call with us and we'd be happy to share that and kind of go over more details. But other than that, that's pretty much it. If you guys want to learn or participate in future deals, don't forget to visit our website, ortizequitygroup, and schedule a call with our team to see how we can best help you. Right now, we have some active deals that we're working on. We got a couple LOIs going out, and so we're in a good position, and we have some really good opportunities. So if you want to learn more about that, just book a call with our team and see how we can best help you. Now we have opportunities for accredited and non-accredited investors, but obviously, we got to go through a little bit more steps if you're non-accredited. So anyways, book a call with us if you want to learn a little bit more. And John can just kind of go through this last slide here.
Absolutely, guys. And again, we just want to say thank you for joining us on our webinar. We hope you found it informative and valuable as we continue to grow and invest in multifamily real estate in the US. We would like to invite you to join our investors list to be notified of our investment opportunities. By joining our list, we'll have access to exclusive investment opportunities and updates on our portfolio. We look forward to working with you and helping you achieve your investment goals. Thank you again for your time and support.
Awesome. Okay, John, can you still see my screen? Give me
Yes, I
one
can.
second. Okay, I just wanted to see if I can just put this here. Can you see my screen still?
Yes, sir.
Okay, guys. So just wanted to add something to today's webinar. This is our website. We do have our webinars that we've already had in the past. If you wanted to check that out, they're all in here. We also have our most recent podcast that we've had. We've had some really big and interesting operators in the US. 1,500 units. 100 plus units. Millions of dollars of value and operators. So definitely check that out. This is our first episode, and these are just other podcasts that we've been on. So that's something you guys can check out. That is our podcast, Passive Investing in US Multifamily Show. You can find us on Spotify, Google Podcasts, and much more. And then also we also have monthly meetups. So we'll be having our monthly meetup in Toronto. So definitely, if you guys want to learn more about that, don't hesitate to reach out or go to our website. Without further ado, thank you guys again for joining us today, and we hope you got value from it. Cheers.
Thank you, guys. Cheers.